Now let's look at actually performing data analytics procedures. So going back to our audit program, you can see that this procedure we pulled in already has a data analytic defined. So we already have a work paper reference that we can access. So if we click on that, you'll see the work paper describes the procedure in detail. It tells us which risks are covered, including the assertions and the 2 risks that we identified which map to this procedure. It tells us which balances the procedure covers, which we defined in our audit program. Then it tells us which data sources we require to be able to perform the test. So the test needs 3 separate data sources, and the key fields that are needed are also described here. Now, because we already ingested this data at the beginning of the audit, the data analytics procedure has already been performed. So we can go straight to looking at the results dashboard. I can see that we tested a total of 676,000 items, and this is showing the value at cost. Of those, 116 of those items had an inventory valuation that was above the sales price. So this is the value at cost, and this is the value at that sales price, giving us a potential audit difference of nearly $53,000, where the inventory was potentially overvalued. As we would expect, the vast majority of the items had an inventory value that was below the sales price, and there were 108,000 items where we couldn't find a matching sale for those inventory items, so we might need to follow up on those further. Here we've got a breakdown of those 116 items and how they break into product codes, and here we've got a chart showing a similar thing, the distribution of that $53,000 audit difference. So going back to our procedure now, we can document our findings that 116 items were found to have an inventory value above the sales price. The total value of these items was $52,710, which was significantly below our performance materiality, so no adjustment is required in this case. However, we did find 108,000 items with a total value of $143,000, which we couldn't test because we couldn't find a matching sale. So there's a follow-up required here, some further testing. We need to inquire why we couldn't find matching sales for those items. Is it that they're obsolete and therefore they need to be provided for in another way? We can also attach additional work papers here to back up our results, and of course we can conclude on the procedure, which will then tie back into our audit program. Now let's take a look at journal entry testing. Going back to our engagement view, we can see that the journal entry testing has already been set up in our audit binder with the journal entry data analytics work paper. And because we've already ingested the general ledger data, the journal entry testing has already been performed for us. Now we can change the settings if we wish. We can descope some procedures. We can choose whether to test the entire general ledger or just the manual journal entries. For each procedure, there may be some parameters that we can modify, and we can also change the weighting of the risk score for each procedure. If I want to change the risk score weighting, I'll need to make sure I provide some rationale behind why we think it's a lower risk than the standard default setting. And now we can save and run the journal entry testing again with these revised settings. So the results break down the journal entries into high, moderate and low risk. I can see that 6% of my journals were high risk, which is 11 journal entries representing $232,000 in total debits. So let's drill down on those high risk items. I can see the list of journal entries. If I hover over each one, I can see which of the red flag indicators were met by that journal. And if I click on it, I can see the line item detail for that journal. We may decide that we want to review all high risk items as part of our policy. So I can either tag individual items for review, or I can simply review all of the high risk items. If we go back to our results, we can see the results in some more detail. First, I can see how the high risk items break down into my audit areas. The larger the size of the bar, the higher the impact of those risks on those sections. And then we can scroll down to get detail about individual procedures. So if I look at transactions posted on weekends, I can see that there were 200 anomalies. This was the total value. I can see a benchmark comparing the number of transactions posted on weekends for this company compared to other companies. I can see how that compares to the same company for previous years where we've performed the same analysis. And I can drill down to see more detail. The insights here are picking out potential anomalies, telling us that volumes and values are not consistent between the years. 43% of the transactions were posted by one person and that there was a spike in weekend transactions in April. But I can also see that the proportion of transactions is quite consistent with benchmark companies. So this is showing the benchmark. This is showing that historical trend. I can see from the chart that Eric Manager is posting the majority of those weekend items and that there was a huge spike in April. I can also see down at the bottom the detailed journal entries, and again, if I hover over, I can see the control points that were met. I can also add these items to my sample for review if I choose to. So now let's take a look at our items for review. I can see again the journals that I've tagged for review. If I click on them, then I can see my work paper for that particular journal. At the top, we show the summary of the journal entry. Below the journal lines, the findings, which are the control points or risk factors that were identified, and then I can document my conclusions at the bottom.